those comments about the labor market was pretty clear that, one, that the labor market isn't really a source of inflationary pressure anymore, and that they don't seek or welcome further labor market cooling. In other words, the greater risks really now are a cooling of the labor market. And so if there's any risk in the outlook, I think, for monetary policy now is that if signs appeared that the labor market was weaker than we see right now, that they might increase the cadence of rate cuts or perhaps increase the amount of cuts when they do make rate cuts. So, for example, instead of 25 basis point cut in September, it could be a 50 basis point cut in September if the labor market looked really weak. We've got a couple of reads on data coming in before the next meeting on September 18. We've got a jobs report coming in on September 6, and two different reads on inflation, the PCE deflator and the CPI report, will both be coming out before the September policy committee meeting.
Indeed. But Steve, I do want to get your sense, and even though all that he said, so two lines, one is, of course, policy adjustment, the time for policy adjustment is here. The second line, of course, being the direction of travel is clear. All of that comes together, like you said, to build the case and build the messaging for a rate cut in September. The key question really is about 25 versus 50. And I'm also a little bit surprised on how divided the market still is, because it's not like the market is running with a foregone conclusion of, let's say, 90% chance of a 25 basis points cut with a 10% chance. It's quite evenly divided, like with 65% for 25 basis points and the remaining for 50. So it seems like while there might be an overall conviction around a rate cut, the market is still a bit confused is not the right word, but really trying to debate the quantum of the cut this time around.
Yeah, there's no, in a sense, there's no clarity, and again, partly because a lot will depend on what we learn in the labor market report that will come out in early September. The 25 basis point rate cut has pretty much been factored in by the market for quite some time. So there is a lot of comfort in that 25 basis point rate cut assumption. But again, these comments about focusing on the labor market do make it seem that that probability of a 50% rate cut is greater. I think really markets are waiting for the next few pieces of data to come out. I mean, the one thing that is a constant in the Jackson Hole speech that's the same in previous speeches after the different committee meetings is simply that they continue to be data driven.